Welcome to today's explainer. We've got a truly wild one to unpack today. It's May 14, 2026, and we're looking at a massive head-on collision between global geopolitics and US regulation. These two forces have the crypto market at an absolute fever pitch right now, so let's just jump right in. Okay, let's look at the numbers. Bitcoin just decisively smashed past the $78,000 level, recently touching $78,348 amid some seriously heavy liquidations. But make no mistake here. There are immense, totally opposing forces driving this extreme volatility today. It's like the market is being pulled in two completely different directions at once.
So, we really need to unpack this. What exactly is pushing the broader cryptocurrency market up so aggressively right now? And conversely, what legislative hurdles are threatening to just yank it right back down? We're calling this the bipartisan stress test.
What we're witnessing right now is a fascinating floor and ceiling scenario. On one side, global geopolitical relief is providing the base, a macro floor that's actively supporting asset prices. But on the flip side, we've got intense regulatory gridlock in Washington over the Clarity Act. And that gridlock, it's acting as a rock-solid policy ceiling, effectively capping the top of this rally.
Section 1. The Macro Relief Rally and a Geopolitical Floor.
So what is actually building this price floor? Neutrally reporting the news here. Donald Trump has claimed that Iran agreed to suspend its nuclear program. From a purely market-driven perspective, this represents a massive escalation in the regional peace narrative, and investors are just rapidly pricing in this relief.
And the economic ripple effects from this? They were immediate. Alongside those claims, Iran officially reopened the Strait of Hormuz for shipping, and we're tracking a newly agreed-upon 10-day ceasefire between Israel and Lebanon. This powerful combination crashed oil prices by roughly 10% and kicked off a huge global risk-on rally as markets price in a permanent de-escalation. That geopolitical relief, that is our market floor today.
Moving to Section 2, the Clarity Act ceiling, and the bottleneck in Washington. But, as the market rides this macro relief wave higher, bam, it slams right into our policy ceiling. The highly anticipated Clarity Act is finally heading to markup in the Senate Banking Committee today, but lawmakers are suddenly grappling with new ethics sticking points. This bill is arguably the single most significant regulatory milestone of the year, but it absolutely requires critical Democratic support to survive and move forward. Right now, we're impartially observing a massive debate unfold over the exact wording of the bill. They're arguing over specific language regarding stablecoin yield limits, broad market structure, and consumer protections. This frustrating bottleneck in Washington is the exact ceiling that's capping the market's enthusiasm today. All right, Section 3, Institutional Plumbing Under Fire, Scrutiny on Decentralized Credit. Now, right underneath these massive macro and policy battles, something really interesting is happening. The actual institutional plumbing of crypto is under intense investigation. We're tracking a high-profile clash right now where Mike Cagney's Figure, which is a major institutional player, is facing intense scrutiny from a short seller over their blockchain lending claims. It's a stark warning. While prices might be going up, the actual validity of on-chain asset-backed lending at scale is being fiercely tested right now. Section 4, Stablecoins and Tech Upgrades, the Ecosystem Expands. Despite all that institutional scrutiny and the gridlock in DC, the ecosystem is just expanding so fast today. We're seeing a really distinct shift toward localized, non-USD stablecoin models. For example, Israeli fintech Bitcore just launched the first privately issued digital shekel. And alongside that, a project called Saturn just raised $800,000 to build the USDat protocol. This is an 11% yield-bearing stablecoin backed by MicroStrategy's digital credit, which literally weaves Michael Saylor's Bitcoin treasury directly into the broader DeFi yield landscape. Moving over to tech upgrades, the Pi network just revealed the official deadline for its V22 mainnet upgrade, which caused its native token to immediately pop 7% as they push toward a fully open ecosystem. Meanwhile, Bitcoin developers successfully demonstrated an attack block on the Signet testnet. Now, why does that matter? Well, it's a critical exercise designed to prove the network can resist malicious block propagation. So the builders are definitely still building. Section 5. The May market outlook and watching the true market mean. So, how does all of this translate into an actionable takeaway for you navigating today's extreme volatility? It comes down to one crucial metric, the $78,500 true market mean. This is the absolute pivotal support line we need to keep a very close eye on as the Senate session plays out. Here is the exact playbook the market is looking for today. Step 1. Bitcoin needs to flip this $78,500 level into firm support. Step 2, the Clarity Act markup has to miraculously survive the ethics debate in Washington without getting stripped of its core stablecoin yield provisions. If those two things align, Step 3, we could see a massive rotation of capital into regulated yield protocols, triggering a short squeeze that renders any recent retail viewership crises totally irrelevant, and that would propel us straight toward that $85,000 target for late May.
Ultimately, this macro versus policy showdown leaves us with one massive question as we wrap up. Will the sudden rush of global peace narratives outpace the stubborn gridlock in Congress? Basically, can the geopolitical floor push hard enough to shatter Washington's regulatory ceiling? The outcome of today's Senate hearings is going to completely dictate the path forward. Thanks for joining me on this explainer, and definitely stay focused out there.